Okay, so I think I finally got the stream thing figured out. Let's give it a second here. Should be starting here in a second. There we go. All right, I apologize for the delay. I'll do my best. Had a little bit of a technical glitches here and just getting started right now and kicking things off. So yeah, it's working now. So just still slow on my end from the stream side. So anyway, we're gonna go ahead and cover a couple of things here on the option side. So feel free to pop in your questions. I'll hit around between the Discord questions to YouTube questions, so I'll do my best at what we can cover here. Market's got about 2 hours or so to go till we close, and we'll see what we can do here with some trades and give you some ideas for putting on some trades. Typically what I do is I kind of spread a lot of capital all over the place. I mean, that's just kind of my way of doing things, is just you spread around. Like I have a ton of positions here on IWM, some positions here on SPY, all over the place. And when you spread it out like that, it's just much more peaceful, I find. So anyways, this is kind of the way I approach it. It's like, Facebook's popping quite a bit. That's a larger position size here. But I just want to show you just some concept of taking profits into strength to start out with before you guys have questions. So when you have a winning position, there's a lot of people, what they do is they go in and just kind of say, hey, I see the profits or whatever, and I want to go ahead and close the whole thing. This one in this case might work fine. But when we look at a lot of the times what I usually do is I look at it like in stages and groups. And I know I mentioned this a handful of times before, but let's say I've got shares of 20. So what I'm going to do is go in and kind of pop in 4, and I'll do 4 times 5, and that'll be my 20. So I will try to buy these back at, let's say right now we're trading at 24 cents. So I'll do one at 24. I'll do one at maybe 22. I'll do one at maybe 20. I'll do one at like 18 or 17. And then we'll just go ahead and start setting in these positions. We'll even do a good till cancel. And this way the orders are just kind of working for me and doing their thing. So we'll go ahead and create a duplicate order, good till cancel. And then we'll pop those in. And then we'll do another duplicate order just to close things out, just so you guys can see kind of the process. It's not all at once, it's just let the stock move and get to your price point. So that way you're always closing things out in stages, right? Rather than all at once, and just helps you kind of reduce the risk exposed. So there you go. So there's one that's kind of closing out. We'll go ahead and continue this process for these other ones because I don't have this stage as well. Kind of close it out. I'll do it in 5s here. Just kind of managing this this portfolio that I usually use for mentoring students or people that I work with one-on-one on coaching and that kind of thing. So we'll go ahead and, I mean, these are already super cheap. So we'll see if we can just close this whole thing out already. Let's just go in and do the full 20. In this case, because there's no reason to kind of keep those. But I'll show you this process as well on the on some of the other stocks. I've got some JP Morgan here, 10 contracts, and here this one's kind of moving up. And a lot of stocks in the marketplace here have been doing really well the last couple of weeks. So you definitely want to look at taking some profits. I was nibbling at Netflix, got stopped out, then again Netflix is popping today, so I didn't do much with it. But here, if we go in and do this one, we'll do it maybe in lots of 5 right here. So 13 cents, and then maybe do another one at 9 cents. So we'll set this one up, good till cancel. We'll do long portfolio, and this one will just kind of close out. Create duplicate order, good till cancel. You can see this is just the general process. So anyway, this is the approach I take from getting out of trades. And it's very similar to kind of getting into some trades as well. So let's say I don't have any here on Pinterest. I did do some Pinterest in my live account actually today. So I've had it kind of during this consolidation phase, but with Twitter kind of popping today, there's some sympathy plays, usually trades that are kind of moving because of other reasons, sympathy play. So as I look into Pinterest here, it's moving quite well. The volume's starting to pick up. So as I look into something like this, you could do more trades into that. Keep in mind, there's a lot of like earnings around the corner in many stocks here. So you do have to watch out for those things. And as we go in and look to trade Pinterest, you could trade it to the upside. I'm going to go ahead and do something simple. Earnings are, how is it? 426 roughly. So I always double check here on the TD platform, 426. Simply because I want to make sure I stay away from the earnings. So we'll go into Pinterest. I'm going to go ahead and set up something a little bit different here. I will go in and do very tight iron condor on the put side. Okay, because again, market's a little toppy. And then I will expand the range here on the other end. So I'm a little more cautious with these up moves right now. So do something more along the lines like this, even maybe 1 point higher. Because again, if I'm bullish on Pinterest, just again, from a trade basis, I got to give it some range because this thing popped. Even today, we've popped $2. So let's say we can get another $1 or $2. I got to give it some room, but it could pull back, right? So that's why I'm bringing in the left side, the put side, and then I'm giving it a range on the upper end. Now, if I'm doing a little more contracts, I could do something like a custom iron condor and do a couple extra puts. Just do like an extra put here. And that gives you kind of that upside room right there without that extra additional risk on the upside. So now we've got some range. We've got about 20 shares, which is 20 delta. And we can try and kind of push a trade like this a little bit more. And that way, if it pulls back, another buck, you're still kind of in the wheelhouse where you're not losing too much theta. Because even back here, you could go all the way out to about here to about 25.60 and you still won't really lose that much theta. Okay, so this is one trade I would probably send in right here. I'm going to go ahead and just put it in the long portfolio right there. So that's kind of a one trade to kind of pop in. From Twitter's perspective, like, a lot of people want to trade Twitter now. I don't know what you would do on here. It's a little bit of a cat and mouse game. The first day, you don't know if it's going to continue higher on day one or lower. So you got to have some kind of opinion. You could say, hey, this is probably all it's going to do. And then you could trade it that way. But for me, again, with earnings around the corner, if you think it's going to explode to the moon, this is what I would do. If it's, if people are buying into it, going to the moon, I would do something like this and just take like a cheap shot for maybe another 18 days. We got to check earnings. 5.5 is the earnings. So what have we got? January, February, March, April, May. 5.5 will be under. So 25 days. So I could do a 55. It's already at 50. Could it go another 5 points? Sure, it could. Okay, we could do a butterfly here. This is kind of a cheap shot to go more to the upside, but I'm kind of defining my risk. I'd probably just do like a couple contracts on there, nothing too crazy. Again, the stock is already extended. Why would I risk that much? Theta is positive to not negative, so this is a good sign. So start something like this. So if it pulls back, it's not a big risk, $200 or so. And then I could, put that in there. This is kind of my cheap shots. I put it in the 50-50 slots over there and put it in there. Now, if I was bearish on this stock, I could do a similar concept where this thing could whip down. And you could have two trades going at once, in all honesty. Like what could happen is this stock could snap down and then snap back up. So your bearish trade could work. And then when it pops back, as long as your butterfly's in the wheelhouse, the butterfly could work. So you could, I've actually done trades in the past where, you get it on the downside, then you get it back up on the upside. So it can work out on both ends. Let me just see if this is kind of favorable on the downside, on the put side. And I don't see it being that favorable here right now. Just the pricing's a little expensive. Yeah, I don't see it. The pricing being is a little pricey, so I'd probably just do a deal with the butterfly and just kind of work with that. Otherwise, I would kind of try and do another short kind of trade on it as well. Okay, this trade, and you can see what happens with the price the minute you get in it, and it's not on a live platform, but sometimes once you're playing the trade, they will shift the prices, so you do have to kind of wrestle with the prices a little bit. But be careful you don't overpay, because if you overpay, then it'll get expensive, and then it'll just burn you out. Okay, so we got those working. I'll let it work. I'm not going to do too much. Plug, I noticed, was moving really well today. So I did get some in a live account on this one. Volume's picking up above 30. So you could see the trend line right there. So what am I going to do on the paper account? Same thing. What I'll do is kind of do some verticals on it. I will do something as simple as this. The expected move is about $4. Okay, so that's plus or minus. So I'd like to get under there, but I'm just going to use the 30 as a little bit of more of the stop. So I'll kind of go into about 29. And my plan for something like this is when it hits the 29, I would just get out of it. It's just kind of an easier way of doing it rather than kind of like, you know, setting an alert and stuff. From a chart perspective, I'm going to go ahead and just do this where I'm risking 42 to be able to lose maybe if it gets back down here about 42. So again, you're risking about 42. Probably do a couple contracts here. Let's just do an even 6. That way you could get out in pairs, 2, 2, 2, 2, 2. And we'll go this way. And then what I'm going to do actually is, why don't I split this and go to 2 different durations. It's just a little bit nicer sometimes. And then I will do one that's a different dollar off. That way I'm just not putting everything in one spot. So we'll do that, throw it in there, and then throw it in here. Okay, so that's kind of another thing that, you know, you're just putting a little nibble here and there. You just nibbling around. Let that go. It's just managing an account, managing positions. How might you trade it? Let's see, pins we got in there. Okay, that's working. Okay, let's see, AMD here. I'm just showing you how I manage stuff. If you have questions, feel free to write them in. AMD's been acting a little sluggish right here. Took some profits because this one had 20 contracts before. But here, this one's kind of moving well, so I'll take off half the profits here. This is 490, so this will take off half right now. And then while I'm doing this, why don't I set another alert for the rest of the half? So we'll do half here, and then we'll take off the other half as well for like 70 cents. So that'll give me kind of a good position here. Okay, good till cancel. We'll get rid of that. And we'll confirm and send. Let's just do the good till cancel just in case. Get rid of that. Kind of close that. And then the other one's kind of working. So we know we've got it working right here. So AMD, there it's in there. This one's unallocated. I'm going to move this back over here. It's part of this, just like organizing your stuff. There we go. Okay. All right. Had a question in here. Let's see. Just put it up on the Discord. Can you check AEO for a bullish trade? Would you sell puts in this case or put verticals? Let's check it out. And I'll throw it in. American Eagle. Yeah, I wouldn't sell put. Maybe if you wanted to own the stock, I wouldn't sell put verticals exactly. The stock is still kind of trending lower a bit. I would wait till it kind of creates a base and starts turning around. Like take a look at Pinterest. It's a little different, right? So you have like this like base, which you don't see that with a stock like this. Now, granted, what they can do is they go here and snap up. And in this case, I would rather do a defined trade, risk trade. The better approach that I would do for me, and I would do it like this with this like a small dollar figure. Let's check the earnings real quick. 525, so there's plenty of time left. So we'll be in May. I'd probably go 39 days. So for a bullish trade, I would do something more like a purely defined risk right here. Something like this, a $2 wide spread. And I would be willing to let this go to full expiration, meaning a full loss. You're risking $100 to potentially make about, let's say, $60 because you're going to collect this before it gets to expiration. I would close it out, and I would actually just set this trade up. Let's go with $1.10. Let's see if we can do it and do it a little cheaper. It's a 50-50 right at the, kind of right at the money. See if it gets filled. And then what we'll do is, let's see, first trigger sequence. So what we'll do is create an opposite trade. Once that gets filled, we will sell one for about what, 50% of that, 30% or so, about $1.50. So we're going to go ahead and do that exact trade right there. And we'll just put that order in and we'll see if it gets filled. So I basically set up a more complex order, like saying, hey, if we get filled at $1.10, then we'll go ahead and sell it automatically for the 150. And that good till cancel later on, I would, or the day trade, I would rather change it to a good till cancel eventually. I could go ahead and change them both to a actual good till cancel, but that's okay. Let's see if we get filled. If not, we'll tweak it again. But that's something what I would do, and I just kind of let those things sit. I don't really play with them. It's kind of like, oh, okay, I'll throw $100 in here and take a shot, because it's not one that I, would have a big interest or stake into trading. But if you do, then you could obviously trade a little bit differently. You could even stack other things on top of it. Like you could sell puts and put verticals. The problem here with something like AEO, there's not a ton of premium here. There's just not. Even at 39 days, there's just, you're just kind of really unhappy with the premium amount. So it's a little bit more difficult to really trade this with selling put verticals. I mean, again, everybody's got a different account size, but I just look at the premium. It's just not a lot of premium at a $16 stock. Usually verticals like at the money for a directional move or trade are much better for stocks that are a little bit cheaper like that. And then you can just have the full risk, taking it to full expiration at a loss, or take it off about 50%, 60%, 40% profit. And that just helps increase the probabilities. Hey, Aaron, how are you doing? So let me go ahead and keep working some of this stuff here. It just kind of recalibrates my account here for a lot of the mentoring stuff that I do. Plug, are we still working on it? Yeah, see. So I just let those trades kind of work. You don't have to rush them. Sometimes if I see, hey, I'd like to push the order a little more, I'll go ahead down a penny, and then I just let it work again, just to kind of let it do its thing. Because you want to let the trades work. If you're rushing, it's usually not wise. Let's check in on our QQQs. So Qs here, what you can see here right now is we're basically holding about 29 delta. And what you'll see with the Qs, we are a bit toppy. There's a couple things I could do if I'm trying to add positions, or if I'm trying to kind of reduce positions. If I think things are a little toppy, I've got April 14th. If I'm thinking toppy, I could add another call. If I'm thinking, hey, I want to accumulate, well, what I'm going to do is I'm going to go ahead and sell more puts. I don't like to sell puts too short, like 4 days, 7 days, 9 days, a little short in these markets, especially when you're toppy. That's fine if the market's sold off. So I'd say let's go to about 14 days. And if we accumulate more shares, great. If not, that's okay too. So we'll go to about let's see, about a 14, 12 delta maybe. Let's go with it right here, 350. Nice even number. And we'll just sell a single put right here. I'm going to go here. I'm going to go ahead and actually start doing a few put sells right now. So I'll go and create another group. We'll call it puts. So I will go to QQQ and start moving this over to the puts. There we go. So I got some puts in there. So I'm going to go ahead and switch to the puts. We'll go to QQQ, and there is my put. Okay, so here's $1.36 is what you're trying to make. So analyze closing trade. If I try and buy it back at about 40 cents, that'll give you about $96. So what we're going to do is we're just going to go ahead and set the duplicate order. Good till cancel. Send it into the put side. There we go. And that's good to go. Let it do its work. Money needs to work. There we go. Bring it back. Okay, so there's one put there working. That's kind of one way of doing puts, is just kind of put it in, let it do its thing. QQQ's here. Let's check back. Okay. Let's see here. We've got call side right there. And then this one's out, so we'll probably get rid of that stock eventually. So I just want to make sure we just keeping an eye on things. Let's see, AMD, I've got a lot of positions there, so that's fine. Facebook, ton of positions. Starbucks, let's check out Starbucks here. It was pushing. Yeah. Okay. Let's see. Starbucks, I've got a single call. Must have been from something else left over, so we'll just close it out. There's no point to have it. The stock has not been doing well for me on the Starbucks side. It's just constantly tanking. I need to sell more puts on it and see if I could kind of work that trade a little bit more. But with the earnings there, got 426. But you can see this one just it's having weakness. And I've been struggling with this one a bit. So let's try about 85. Let's see, earnings, 426. So let's try and sell some more at around 83 maybe. There's a little bit of premium there, so I'd sell it. Let's go 4 contracts to start, and then you can add to it if it keeps going down. I'm going to go in and actually let's just do it unallocated, and then we'll do a new group. Verticals. There we go. So just building that out right there. Twitter, nothing. American Eagle, nothing yet. And this Starbucks is closed, so that's fine. Move that to verticals. Okay, so there's a few there kind of that I'm working right now. And when you start looking at some of these trades, you could always start going into like other stocks like NVDA, Microsoft. You know, there's a lot of interesting candidates here that you could start nibbling on and start putting on some trades. I just make sure you don't overdo it all in one time on one day. I kind of do it on the live stream for you guys to show you a lot of different trades. But let's say you're doing 100 trades, you might want to break that up over a course of a couple weeks. If you're doing like normally 50 trades, break it apart over a course of a month or something. Don't do it all at once. So if I'm looking to kind of get into Microsoft here, again, 426, you could start building out a position and you start working the order. Here's Microsoft. And I want to watch out for the 26th. So I'll see, hey, the stock's been doing well. Do I think it'll pull back? You know, we're getting into that 320. The stocks came off of 280. You know, I want to be careful. So I could go in and do something as simple as an iron condor as well. But I could make it a little bullish because the market's kind of trending into the bullish side. So I'll tighten up my puts a little bit because that's where the market's been heading. Just a little bullish because, you know, I got short Vega and that's okay. And then you just take it off, you know, as it kind of grinds higher. You could tighten it up even more depending on your outlook. Like, but remember, if we get a little bit past it and then we pull back, that'll be really nice for a for some negative delta, because you do have this negative Vega, which is usually nice to have if you're a little more bullish. So here we've got some positive delta and short vega, so that's bullish on both ends. So, but if I do just simply selling put verticals, it's a little more aggressive. So if I want to be less aggressive, I will go ahead and do more of an iron condor like this. That's a little more bullish. How do we calculate the vega? The vega is already calculated in the option pricings. So it's already calculated in there. So you don't have to calculate the vega. So we'll go ahead and just start something simple again. Confirm and send. And I could start, put this in a new category here. Call it times theta spreads. So now we've got another part of our portfolio we're kind of working on, theta spreads. We'll put it in there. So that's kind of what you do on a week-to-week basis. You're kind of putting in a little bit of capital into like theta spreads, some into some 50-50 or directional spreads. Some of these would be kind of in the vertical side. So let's just call this selling premium. Okay, and then here we'll do directional, because this is a little bit more directional. There you go. And then this theta is basically time spread. So we'll see if we get filled. Again, I wouldn't rush the orders, but this is what you kind of do with these things. NVDA or SPX. One of the things I like to do periodically is with this SPX or SPY. And this one's kind of grinding up on me right now. But let's go into SPX. These are some of the faster trades to do. Like some people like them, but they are a little more risky. So let's go like a 2-day thing. They can really burn you. So you have to be very mindful of doing some of these. But let's say we go to the 4,500 here. I'll just do a 5-point wide. Like you definitely don't want to put a lot of capital into stuff like this because they can just drop or pop very quick and go against you. But if you place a trade like this, you're risking about $400, and then at expiration you're trying to make 100. So percentage wise, in a couple of days, it's very friendly and very nice. But unfortunately, if it moves very quick against you, you can get into some trouble. And I'd rather do this with SPX because you don't have share assignment like you do with a stock. But it's nice one to like say, hey, well, if it lands kind of in this range, or if the theta picks up speed, it's a pretty quick theta. So even in like a day or so, like this theta can be pretty significant. So, $40 or so on a $400 position, that's looking at 10%. But these are quick trades and they're fast. So if you do like any fast trading, they're short duration. And then we can go in and add a group, 0 days or fast trades. So it's kind of like another part of the portfolio that you may want to go ahead and have. There we go. Iron Condor is filled actually. So there we go. We'll move that into fast trades. And these I always like to keep at the top, because if you don't, you got to keep an eye on them. If you don't keep them at the top, make sure you don't forget about them. And then we'll move that up and move it up. So they should be kind of one of those things you really keep a close eye on. Okay, so this is kind of like we're starting to build out different parts of our portfolio. This is what a bigger, longer portfolio is starting to look. So if you start selling like puts, you could have like 10 things in the puts. You'd have 5-10 different things in the theta or time trades. So you might start saying, okay, well, I'm going to go ahead and have some puts. And then you could start building out some stuff, AMD, or you might say, hey, I want to sell some puts on lows. Because I was looking at lows not too long ago. It's kind of getting into the 200. It's been selling off for a while. So that's why I was looking at, hey, maybe we can sell some puts on there. And then you'd accumulate some shares. So we'll go, again, earnings, 518. So let's do a 10-day, maybe something cheap, 187. Sell a single put on here. And we'll just go in and try and collect right here. Okay, $45. Yes, it has to be cash secured puts, and you will get assigned if it goes below that. Hey, good afternoon. Okay, so now we've got some puts there on lows, and what I want to do is probably already put a good till cancel trade on it. So we'll go back to the put side. Analyze closing trade. Oh, there's the butterfly on Twitter. See, got filled. And Facebook got filled. Again, paper platform, but it's sometimes being patient works. Here, the market's starting to move a little bit, so that's probably why we're getting more filled in that area. Okay, so here, this one, I probably would take this trade off if it goes down to about a 5 pennies. There's a Microsoft one getting filled, so I guess there's more movement here. Create duplicate order. Good till cancel. Put side. And there we go. And that order now is kind of sitting in there. So you can see you want to have all these orders in here ready to go and close out if possible. Some of them you can let go to expiration, but you know, you're putting a lot of these trades in here so that way they're kind of closing out as they start moving in your favor, because it's like touch, close, move, close. That's what you want. And wait for your orders. Like you could see the AEO, we're still kind of waiting, and now the price action went there, so there's no point to chase it. You're not doing any benefits to yourself when you're chasing that kind of stuff. So instead, I'd rather watch, put the trades in and let things sit a little bit. That's just much more favorable. So anyway, I've got a bunch of stuff here on the risk arrays as well with the IWM here. And you can see this one's got a ton of positions and capital on, so you're just spreading things out. And what you do here is you evaluate, hey, what's my delta? Market's going up. I probably need some more deltas. And what I'll do here is I'll actually just start spreading out more capital on the IWM. And I usually do this one a little bit longer duration just because I don't like everything 30 to 60 days. It's all over the place. So I don't have anything about 102 days out. So spread out, sell some more puts. We got short delta right now, so I need some positive delta. So I'll go into about a 185, 182, probably 2 contracts at least. We'll just put that order in, put it in the risk array. It's trying to make some premium on some more positive delta. There we go. Delta's down to 13 now, negative 13. And we'll go to about 137 days as well. And I'll look for a delta about 15, 17, somewhere around there. We'll spread out another contract in there. Just, again, different variation. That'll help bring that delta, again, a little bit better, more positive to what we like. But I don't want it, there you go. I don't want it too positive, because if you have it too positive, then if it pulls back, you've got more problems, because you'll invert your position. And let's see here. 165 days you could do, but it's a little further out. Let's see how much contracts we have here. Maybe I'll do one at around 87 days, just one. Just do a 2-point wide, nothing big. Again, small positions all over the place is just much safer. It's just more risk diverse. And let that one sit. And again, just kind of bringing that delta down a little bit. Different spots, different zones. That's all we're looking for. Okay, so that's kind of a basic idea of portfolio management. I've got a ton of inventory here. Long portfolio, some directional stuff. I could do some more directional stuff of like some of these gas plays and stuff. Like they've been going up really fast. And I wouldn't mind shorting some of the, like this Brazil stuff is just going up very quick. So you always want to look at your portfolio as well to see how does it compare? Is it like long or short? Or do you have like everything bullish? And I do find right now I'm a little heavy on the bullish side with this portfolio. So I would look at even like this XLE is just kind of finally getting a little toppy. Just a few days down move, just doing something short could be nice. So UNG, maybe that would be the way to go, because this one's just very spread. So let's go ahead and look at some trades on the short side, or even SPX on the short side. I've got some SPX right here. This is 0 days, but let's go ahead and put some hedges on. I have some hedges, but this is already not working as well. So let's go in. This will be kind of the final thing I'll work on today, just to tweak this portfolio for some of the one-on-one sessions that I do. I'm going to go with 14 to 16 days. We will do a bearish diagonal. And this will be kind of nice. I like these kinds of trades. So we've got bearish diagonal. Let's see if we can go. Let me just tweak it a little bit. Might have to switch some of these expirations. There we go. That one's pretty good. We'll go something like that. Let's see. Bring it back. And now we've got a little bit of a bearish thing here, where if it pops down, or when it drops, even a little bit of a drop can really benefit this. And I've got such a big theta, so even if it runs up, oh, there goes IWM. Couple days into it, it's still breaking even. So the objective here with these types of trades is to break even if possible, if it's going against you. And then once it does get that 1 day pullback, or 2 days, that's when you collect kind of the profits behind them. So anyway, we'll start something like this, hedging a portfolio of, like, I'm checking out the deltas here. Like, you watch all these deltas. And then the way you decide that is, I'm looking at beta weighted. Let's look at SPX. Well, actually, we won't do that. SPY. So if I look at beta weighting SPY, I'm looking at 46. I'm looking here. There's a ton of positive delta. So I need, like, there's 200, 300, about 400 deltas if I hedge, but I don't need all that. So that's only like 40 of these. So we'll do like, let's do like 4 to start. And that's just like a simple light, get it started kind of hedge. So this way, if it pulls back, it's 500. Nah, it's not enough. There we go. If it pulls back, yeah, I need much more deltas. Negative 30 delta, because now if it pulls back, you're up, maybe $1,000 or $2,000. But on that portfolio, yeah, we want about 40. Okay. So something like this, 13 contracts. I'll put it in the hedge area. And then there we go. And now we've got a little bit of a position there to hedge off, like, a lot of the bullish risk that we have, that if we get a 1 day nasty move, that'll kind of help out. If it kind of starts moving to the upside, that theta will kind of help. And then you're just looking to kind of break even on this. And that's just, the market is just, it's just short term. It's been going up quite a bit. That's just a fact. You can see we've been going up quite a bit. Even now, we're still kind of popping quite a bit. So I wouldn't be surprised if we get a little bit more, even if it's short-term pullback like this, because you see there's some fear that'll come in, and maybe we'll get, again, a little bit, and that'll just turn it into some sideways action. So anyways, that's just kind of me playing with some of the portfolio things. Couple questions. Let's see. Would iron condor consideration non-directional? Yeah, you could do some non-directional iron condors. It's just a little bit tricky right now, unless you're doing it on the IWM, QQQs, SPY, SPX, or any ETFs. It's more tricky right now with iron condors, unless you do them short duration, just because we have a lot of earnings to play right now. There's earnings on a lot of stocks coming up. So this one's 428. So there's not a lot of wiggle room with iron condors right now, unless you do them. Usually when you lead into earnings, a lot of times the calendars work really well, because you have an implied volatility that continues to inflate. Iron condors can work fine, but you do have the problem of the earnings. So 428 right now, and we are, and this one 29 is when it expires. So that's a little bit of a problem. So I got to do like an 18-day iron condor if I did Apple. So it's already a little bit tricky. You could do it, but and you can't get as wide right now. So here I've got this iron condor now, but I've got earnings. So let's do simple 2 contracts. So that way we could get out with 1 for a profit if we need. I want some short delta because I have short Vega. I want short delta to offset the Vega risk because my Vega is almost 2 times the size of my theta. So you do need some short delta if you were trying to be non-directional. So I'll just go ahead and put that in, and that'll be in the theta spreads. We'll see if it gets filled. And I just let these sit throughout the day, like as I'm doing things. Sometimes then I check back after like a video. As I'm doing these videos, then I'll go back to the trades computer and I make quick adjustments in the same way that I did it here. So right now, my other computer, I have it kind of going to tweak some of those trades or positions or pricings. So if we go ahead and not get filled and I need to push it, then I'll go ahead, cancel and replace. But oftentimes within 5-10 minutes they get filled, maybe 15 minutes. But if they're not getting filled, then you just tweak them, and then you could even in the evening time put a lot of the good till cancel orders in place. Like here I've got these good till cancel orders, just let them sit there, and then you can work it. So here I've got Apple. Right here I got 2 18-day contracts. So I'll go ahead and analyze closing trade. So already right there, let's see, the most I can make is 216. I'm risking 284. So 10%, even $30 would be nice. That'd be 10%. So $30, that'd be great. But if I can get away with even $15, again, it's a smaller position. So you have to kind of take it into account percentage wise. So here, what you're looking for is maybe 95 cents. And I just create a duplicate order, good till cancel, put it on as a theta trade, and just let it work. That's how you're able to continue your life without stressing too much. It's just, there it is. It's kind of now working. And then you can go on about your day and check on it, Microsoft, same thing. Now that we've got the trade in, just to see if I have anything Microsoft working. Nope. And then you go in, check in on Microsoft. There it is. It's already filled. Buy an iron condor. We're risking about 345, so get out maybe for 35 bucks profit. I'll just try and go in right around there, create a duplicate order, good till cancel, because it may just touch it for a split second, and that's why you want to have those orders sitting there. If it touches it for a second, there you go. We got the orders working. So that's how you work your trades. You don't have to push it. The minute you see a certain profit, most people then try to pull the trigger, and by then the trade is already gone or missed. Let them sit, let them work, let them do their thing for you. It's a much more peaceful way of trading and less stressful. So anyway, I hope that helps. Sorry for the delay on this stream here if you guys stuck around with me. I just had some technical things, and enjoy the rest of the week ahead. I'll see what we can do here later on, and I'll kind of go from there. We do have the, let's see, the Thinkers, sorry, not the Thinkorswim, the Market Seasons class coming up towards the end of the month here, April 25th. So definitely check that out if you want, and join the class. It'll be about 3 to 5 days on Zoom, 9:20 p.m. Eastern time. And you can register and that way attend live as well. Ask questions. A good time to just ask questions if you have any, and kind of like partly a coaching session as well, because I always try to hop on a few minutes beforehand and stay after as well. So anyway, thanks again. Enjoy the rest of the week ahead, and I will see you next time.